Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Vinny Motiwala. Good morning, Vinny. Another session where we're actually seeing markets, all of the indices in the green, mid-cap and small-cap indices continue to outperform, both of them trading with gains of over 1%. Absolutely. And this is for the second straight session where we're actually seeing the broader end of the markets outperform. Advanced decline ratio very strong. Absolutely. An interesting day coming in. One more day for this markets to be on the green is surely an interesting one to watch out for. Nifty almost is trading near the day's highest point. 22,900 is what the Nifty is trading at, above that mark. So interesting in terms of that move. Vivek, you mentioned as well that the broader markets outperformance in that fund. Two sectors that are seeing a bit of a subduedness right now is FMCG and IT. Some bit of a pressure on both these names and some bit of that red coming in on the screen for this one. For FMCG and IT is what we are watching out for. Interestingly, Vivek, just checking a few names right now on the screen. Tanla Platforms, Hindustan Zinc and Sirma SGS. These are some names that have suddenly seen a spike up coming in also in the last 1 hour specifically. Wow. You know, that momentum has continued, Vivek. But yes, that's what I'm looking at in terms of the market. Anything more on that? Absolutely. So quite a few stocks, it's a day where, we've discussed the entire steel pack, the metal pack in detail, and all of these stocks continue to see the positive momentum. In fact, we'll have a detailed discussion with both the steel company as well as an analyst later on in the show. Mahindra Lifespaces, some positive news flow coming in terms of a lease deed as far as the land parcel in Tamil Nadu is concerned. Mahindra Life today has surged and almost over 10% is where Mahindra Lifespace is trading at currently. Muthoot Finance, the other stock, earlier they spoke about how the gold loan AUM is something that is expected to grow 40% plus in FY25 as the earlier guidance. That stock up over 4%. But another stock that's doing very well in this session is Tata Communication. And initiating coverage note as far as Tata Communication is concerned from JM Financial, Hormal joins in with more details.
Interesting note coming in there from JM Financial on Tata Communications. They've initiated coverage, a buy recommendation, a price target of 2030, which is a 30% upside from current levels as well. They're valuing the core data segment at 11 times FY27 EV to EBITDA, which is a slight premium to its historical average of around 10.2 times. And that premium comes on the fact that they are expecting this data segment business to grow, the EBITDA of the data segment business to grow at a 21% CAGR over FY24 to 28. And they are also saying that this digital portfolio of the company is going to be a long-term growth driver going forward. And despite these macro headwinds currently, which might have an impact on discretionary spending, that might result in the FY27 targets that the company has laid out may be delayed by a year to FY28, or they may take the inorganic acquisition route to achieve these targets in FY27. That's what JM Financial has said. And among the key risks that they have highlighted include weak global macros, the delayed discretionary spends as we just spoke about, and an adverse AGR ruling that might be a downside risk to JM Financial's estimates. But overall, expecting a 30% upside here, the stock doing well for itself today. Absolutely, Urmas. Thank you so much for that. Keep an eye out on Tata Communications, as of now holding on to gains of almost 3% in trade. Let's move on and pull up some of these AC stocks named. They are surging in trade, and this is after the government has exempted critical AC and refrigerator components from BIS certification. Upasana is coming in with us right now to tell us, what are the details coming in on this one. Upasana?
That's correct, Winnie. Now, government has exempted certain critical AC and refrigerator components from mandatory BIS certification. This is to prevent a potential supply shortage during the peak summer season. Now, Elara Capital, on the back of this move, says that the government's move will have a positive impact as companies were facing issues in sourcing. Now, this move will be positive for companies like Voltas, Blue Star, Lloyd, Amber Enterprises, EPAC Durables, and we can see the stocks also surging higher in trade today. Now, DPIIT has lifted BIS certification of factory requirement for grooved copper tubes and AC compressors of 2 tons and above capacity. Mind you, 2 tons and above capacity, this represents a lower single-digit share as a percentage of overall RAC. Now, Elara Capital is of the view that 55 to 60% of room air AC compressors are imported as local manufacturing is limited, with Chinese, Japanese and Korean companies being in the market. It's a positive step, but not for a large size of RAC market is what the brokerage believes. Now, earlier this morning, management of Blue Star and PG Electroplast joined us to discuss about the summer demand compressor shortage, and also about the recent government notification as mentioned earlier. Now, Blue Star says that India is not fully self-reliant on AC compressors importing from China substantially, and the current supply chain can handle only up to 25 to 30% of the growth in AC demand this season. The situation is in a touch and go at this point. Now, PG Electroplast says that some players are facing supply chain challenges. If industry grows beyond 25%, it will be a problem. And lastly, cost is the major hurdle in boosting penetration of energy efficient 5-star AC is what the management has indicated. Hence, all these stocks remain in focus today on the back of this.
Thank you so much, Upasana, for joining in and telling us what exactly has transpired as far as the entire AC space is concerned. All of the stocks doing very well. Voltas up 3%, and this is after the stock has rallied close to 10% in the last few trading sessions. But moving on, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on silver.
Thank you for that, Vivek. Well, yes, we've seen strong gains continuing into this one as well. Well, actually, when you look at within the precious metal as a space, we've seen silver actually outperform gold as well. So silver prices on COMEX are trading at a 5-month highs, but they're trading at an all-time highs in the Indian markets here. And with the kind of gains that we've seen in the overnight market, a percentage point of an upside, we are up by 18% till time in this year itself. When you look at the prices, well, we are trading above $34 an ounce in the international markets. When we started this year, we were trading at around 29.5. So that has been the kind of gain. And if you look at the prices on 1st of January 2024, silver was at 23.16. So from there, 34 plus is where we are trading at. Well, there have been a lot of supporting factors. Some, of course, because of the safe haven buying that we've seen in gold also seems to be spilling over in case of silver. And then apart from that, you also are looking at a deficit in the global markets. The industrial demand for silver is expected to hit a record 700 million ounces in this current year, and that has been supportive as well. And then markets also are looking at the trade tariffs. Remember, US imports a lot of its silver from Mexico and Canada, and there already are tariffs in place. If there are reciprocal tariffs announced on 2nd of April, then you could be looking at silver getting difficult to be imported into US, and that's exactly what the markets are factoring in right now. When you look at the COMEX inventories in sense of longs, that also is at an all-time high. It was started to be built up in 1972. So that is the kind of numbers that we're looking at. And we've seen 40% of a build-up in COMEX inventories there. So clearly, there is slight shortage that you're looking at. Demand is on the stronger side. And then the safe haven buying and investment opportunities are keeping the silver prices higher.
Absolutely, Manisha. Thank you so much for that. So not only gold, but all that's glittering is also going to be silver now. So keep an eye out on that. On that note, we're going to be slipping into a very short break. And after the break, we're going to be focusing on the big news for the day. DGTR has recommended a 12% safeguard duty on steel products. We'll be joined by Rajesh Ravi, institutional research analyst at HDFC Securities, to discuss this. So don't go anywhere.
Welcome back to Trading Hour. Well, metal stocks are in focus and gaining in trade after the government recommended a 12% safeguard duty on certain steel products for 200 days. This is to protect the domestic industry from imports. The DGTR proposal, however, needs to be ratified by the Finance Ministry. The industry was rallying for a 25% import duty hike, but the expectation was approximately 10 to 15% safeguard duty. According to brokerage firm Phillip Capital, the move is significantly positive for SAIL, JSW Steel, Tata Steel, while NMDC and other ERW pipe players could also get a positive rub-off impact. To understand the impact of this, earlier we spoke to Parthiv Jonsa, lead analyst metals and mining at Anand Rathi Institutional Equities, and Harish Krishnan of Aditya Birla Sun Life. Let's listen to excerpts from this conversation.
There has been reduction in the coal cost. There has been your iron ore is holding steady, and with this increase in realization, say by next maybe 1 or 2 quarters, you can straight away expect a good 10% or maybe better than that kind of a EBITDA improvement across the ferrous sector.
We had three dark horse sectors. One of them was private banks, second was metals, and third was cement. Of course, these are 3-year views. It's not necessarily validated or invalidated by what we think has happened in the last 2 months or so. But from a metals perspective, the reason why we have been positive is if we plot the profit pool share, which is the profit of the metal sector divided by the top 1,000 companies' total profit. You will see that it's a very cyclical sector. A weaker rupee, to a certain extent, also benefits, the metal complex. So we've been positive on metals as a contra trade. Of course, the move has been very sharp, but we think, over a 2-3 year period, there still is a reasonable amount of, greater alpha creation, we think, from this metal complex.
Okay, let's carry forward this conversation then. And we have Rajesh Ravi, institutional research analyst at HDFC Securities, joining in with us to discuss more on this topic. Thank you so much for joining in with us, Rajesh, this morning. And let's just take a quick look at what this means for these companies. 12% safeguard duty on flat steel products. What would be the benefit coming in for most of these steel companies in terms of the EBITDA per ton? How much are you expecting? And what would be the price hike that one would be envisaging coming in here?
Yeah, hi, good morning. Yes, this is indeed a positive move for the industry, which was reeling under, a falling steel price scenario for more than 2 years now. And given that the government has finally, suggested that a safeguard duty be imposed, this will obviously arrest the pricing decline, which we have seen in the past, few years. And we have seen some improvement in flats prices already in month of January and February, and we believe more to come through. Now, why this was important? Because from a domestic steel manufacturers, if you look at the Bloomberg estimates, FY25 EBITDA estimates for the for all the headline companies have been cut down by almost 30 to 35% over the past 1.5 years. And even FY26 estimates so far in FY25 have seen an erosion of almost 10% plus. So there was a continuous downgrade which were happening because of the falling prices. And this was despite the industry witnessing healthy demand in terms of domestic consumption. So with these safeguard duties and even the recent news flows coming in from China, whereby they are looking to cut down production, which would imply that exports from China would slow down and the flushing of the global market will reduce, and hence these two can lead to a positive bearing on the global steel prices. And that is where even if we look at a 2 to 3% incremental hike in steel prices, that is a good news for the Indian steel companies.
Right. Rajesh, give us a sense, number one, of what is the current pricing scenario as far as the steel is concerned in the domestic market. What has been the trend over the last 3 months? Post imposition of this particular duty, what kind of a price hike do you anticipate? Could you give us a sensitivity analysis of how companies will be impacted and what are top picks in the sector?
Sure. If you look at the past 3 months, so what happened in Q3, we saw the longs prices recovering quarter on quarter while flats prices were under pressure. However, start of this quarter, the flat prices have recovered marginally by around 200 to 300 rupees per ton, whereas flats, the longs, flats prices are recovered by longs prices have been flattish to marginal. We can say they are flattish. Now, obviously, but in anticipation of bottoming out of scenario, but more will come through with this, the imposition, which is now almost certain getting implemented, and other countries also imposing such duties on Chinese exports. So, as far as the sensitivities goes, I would suggest that for almost every 1% increase in steel prices, your EBITDA could move up by 4 to 5% between players. And given that most of the Indian majors, steel majors, are all domestic sellers, most of the volumes are exposed to domestic markets where demand is strong. Steel price uptick will have a positive bearing overall. So if steel prices do recover by 2 to 3% point in FY26, that could lead to, incremental realization gain, that could lead to an EBITDA upgrade by 10 to 15% for the sector as a whole. And topics, we are very
Right.
positive on JSW and JSPL.
Right.
Okay. Okay, thank you so much, Rajesh, for joining in with us and explaining us what this means, and the impact coming in on EBITDA on the positive front for these companies is very important. So thank you so much for that, Rajesh. But on that note, we're going to slip into a very short break, and after the break, we will still continue this discussion forward with Manish Sarda, Director at Sarda Group, joining in with us to talk to us about this. Welcome back to Trading Hour on CNBC-TV18. Now we are going to continue to put the spotlight on DGTR's proposal for a 12% safeguard duty on certain steel products for 200 days. We're joined by Manish Sarda, Director of Sarda Group, to discuss more on this topic. What is the impact for them? What is the benefit here? Mr. Sarda, good morning, and thank you so much for joining in with us on the show. Let's just start by talking about the impact that it comes in for the company. This 12% safeguard duty that is there on some of these steel products, what does it mean? What is the benefit for you in terms of your EBITDA per ton as well?
So, good morning. Frankly speaking, this DGTR 12% move is to protect the local steel industry, our domestic steel industry. Mostly the duty has been recommended on HR and CR and flat products, coils and plates. Overall, it will not directly impact us, but the sentiment in the steel industry will be good. We are basically producing long products, and there is no duty on long products as of now.
Right.
Understood that. Mr. Sarda, the other thing we want to understand is, overall, what is the ask of the industry when it comes to protecting the domestic steel industry? What was the ask? What has come about? And going forward, do you think these measures are enough to help the domestic industry come back to the path of profitability it was on earlier?
So overall, the steel industry is just asking that we need to be given a level playing field, or either, we can have a certain amount of duty protection so that there is a level playing field which is there for the steel industry, for the domestic steel industry to actually be competitive at a global level as well. Basically, if you look at the raw material prices in India, especially coking coal, we don't have ample of coking coal, and coking coal is a big cost for all the blast furnace route producers of steel. So what we are saying is that we are having FTAs where, many countries are also dumping steel into India, and we have seen a huge import from China, Korea in the last, 1.5 years. So all we are asking is that the level playing field should be maintained so that Indian, steel companies are also globally competitive, and there should be a level playing field.
Absolutely. Level playing field is what is the ask of the company, and that so that the domestic companies can be competitive. Mr. Sarda, like you said also, you all are mainly into longs, but you do sell pellets as well. So overall, this is surely going to be having some benefit on the value chain and the gain coming in for this as well. Does this in any way will help your EBITDA also, this move, or any sort of that incremental benefit that you could see because of this?
So right now, I will not be able to predict anything. We have just, got the news of this 12% duty as a 200-day duty, which has been proposed by the DGTR. We'll have to see the actual impact in terms of the pricing increase that happens on the flat products, but surely the overall sentiment will be good of the steel industry. Basically, what I see is that there will be a certain amount of price increase that will come into effect. We have to see what is the overall price impact. And yes, raw material prices will also move up, and it should, I personally feel it should overall increase the profitability of all steel companies and the value chain as well.
Understood that. The other important aspect, especially when it comes to a player like you, is number one, what is the kind of sensitivity that price increases have against demand? Do you think there could be a certain impact as far as demand is concerned, or do you think demand continues to remain quite robust? And the other question is, what is the trends as far as iron ore pellet prices are concerned, what has been the trend so far? Going forward, do you think that can improve?
The demand overall in India has been good, and we've seen the surge in imports as well, in the last 1.5 years. And I think with the infrastructure push that the current government is trying to bring in will definitely boost the demand as well. What we are seeing is that there have been cheap imports compared to what the domestic pricing is. And that was the major reason, one of the major reasons for such high imports is because of the pricing factor. Now, many of these countries have been subsidized, specifically in China. If you look at it, the government has a huge support for the industries in different provinces. We feel that here, once the demand we are already seeing, which is good and robust, once the level playing field is there, overall the steel industry will benefit and the overall value chain will go up. So even pellets and other raw materials will also benefit from this move by the DGTR.
Mr. Sarda, a couple of analysts today have highlighted that this particular move, of course, independently is very positive for steel companies. But they're also saying, especially when it comes to China, there are talks of steel output cuts, and also Indian players who export will benefit from significant announcements that have come in as far as Germany is concerned in terms of infra funding. Give us a sense in terms of, especially for a player like you and the industry at large, how do these other measures also benefit?
China announces a lot of things but I don't know really when it will come into play. China announces production cuts for, reducing carbon footprint. And we've been hearing that for a long time, but they are still close to 1 billion tons of steel manufacturing. And the overall protectionist attitude, from different countries, what we are seeing has created quite a volatile situation for the moment. I really think that once the clarity on production cuts are there, actually in reality, then only we'll be able to see the benefits that India will get. But any cuts or any production which goes out from China will definitely help India in a big way.
Mr. Sarda, can we now decisively say that Q3 was the worst, especially when it comes to the metal and mining sector in terms of EBITDA per ton, EBITDA margins? Do you think Q4 onwards we can now see a significant uptick?
Definitely, because this is definitely going to boost up the prices of the flat steel products by at least, the direct impact would be, let's say, roughly $60. And I think there should be a price increase of $35 in the flat products.
Okay, Mr. Sarda, that's an interesting number, keeping an eye out on that. And thank you so much, for joining with us on the show, explaining it to us what it means for the industry as well as the company, hoping for the best going forward. Thank you so much for that. But, okay, on that note, we're actually moving forward and going to a break. And after the break, we'll return and talk to Mitesh Thakkar on market technicals and discuss his top bets for today's trading session.
Welcome back to Trading Hour. Well, Mitesh Thakkar now joins in for a quick technical check on the market. Thank you so much for joining us, Mitesh. What are you making of the markets at current levels? Can we now say a decisive bottom is in place? And what are the upside targets you see?
Good morning. So actually, getting past 22,800 yesterday was quite positive, and that suggested that this bounce back will extend possibly to about 23,100, 150 zones, and in a best case study, 23,550, 600 levels. So in that sense, stay positive. The Bank Nifty is hitting one important level at 49,800, but then there's a good chance that we might actually see this rally extend to about 50,200, 300 zones as well. So what we would suggest is that if you're carrying some longs, take some profits over there and trail your stop losses. But if you get an intraday decline, I think then that'll be a very welcome entry point. So the levels for the Nifty would be anything closer to about 22,750, 780 zones, and on the Bank Nifty, I think the corresponding entry point would be around 49,500. So the trend is positive, but we've had 2 days of very good move. So a profit booking can always happen at any point in time, but that will be, for me, a chance to buy on the long side.
Okay, chance to buy on the long side. Mitesh, what are your top bets today?
On the stock side, realty stocks are looking good, so I have a buy on overall realty, which I would recommend buying with a stop below levels of 1580 for targets of 1650. And the other one is the Godrej Properties. That's also breaking out. So buy here with the stop just below levels of 2072 and a target of 2160.
Thank you so much, Mitesh, for joining us, giving us a sense of markets as well as your view, especially positive views as far as the real estate pack is concerned. Well, we'll now take a short break. Up next, we'll discuss market stocks as well as fundamentals with Anirudh Garg of Invaset PMS.
Welcome back to Trading Hour on CNBC-TV18. And now let's bring on board Anirudh Garg, partner and head of research at Invest PMS, joining in with us to discuss market fundamentals and his top sectoral picks. Anirudh, thank you so much for joining in with us on the show. Let's start by talking about FIIs coming back, right? That positive sign coming in is something surely interesting, and I think that that is what is interesting the markets as well. But do you think that they're coming back with a bang, or maybe this is just one of those cases where you see one day of positives and again back to declines? And overall, in terms of your market momentum, you're expecting from here on?
Very good morning. Thank you for having me. See, I look at it from a very different point of perspective. I don't look FIIs or DIs. I look at it from a valuation matrix point of view. What had happened in the Indian markets in the past few months, especially post, I would say, August, the risk-reward ratio because of the valuations and the exuberance was not in the favor of the Indian markets. And FIIs, if you note, have been a seller for a very, very long period of time. But now our Indian retail is supporting. If we talk about the last 2 months, what has happened? Firstly, the valuations have corrected. We have seen broader indices come down 20%, 25%, the Nifty coming down around 16, 17%. So this is generally what the trend of this run is. If you note something what happened in June, starting from October 21 to June of 22, the Nifty corrected 18%, the mid cap, small cap around 25%. So this is how this bull run is. And I think the valuations are now turned in our favor. Apart from that, I also believe that the confusion with Donald Trump coming in and this this duty mess, this has created a lot of confusion in the market. And all this confusion generally leads to, the beginning of major bull runs. So I believe that we are on a cusp of a breakout or a major bull run. And the next couple of years from here should be very, very good. And if the bull run will be there, the FIIs have to come. India, the only negative point for FIIs, I feel that we should not have had the capital gains tax that we have now imposed for the FIIs, because they are fighting the dollar, they're fighting inflation, and then you have the, the capital gains tax for them as well, which they're not charged anywhere in the world. So that is one negative thing for the FIIs point of view. Rest, we believe that next couple of years, from what is happening in the US markets, if the interest rates come down, the developing markets will have a very good surge of inflow from, Western markets.
Understood that. Anirudh, a lot of the factors that you mentioned are now slowly but gradually, turning favorable in terms of how exactly you're looking at it from the Indian point of view. Going forward, do you feel valuations are now attractive, especially as far as the mid-cap and small-cap space is concerned? Do you think earnings have bottomed out? And incrementally, where would you recommend deploying capital?
So see, if I talk about the mid-cap and small caps, they are comparatively expensive from what their long-term averages have been. But short-term anomalies can do happen. We have seen it from time to time in 2006, maybe post that in 2016. So all these anomalies do happen, but we have to keep in mind that the mid-cap and small caps are expensive. So like the last 2 years have been, it will not, I believe it will not be a run which will, everything will not run in this run. You will have to find your relative changes. What will be the factors that will, that will lead the next bull run? And I believe that we will have much more large cap participation in this run than the mid cap alone. Last 2 years, the defensives have not been a very great sector. The banks, the financials have not been a very great sector. I believe the sectors which have not led the last two runs will be at the forefront this time.
Okay, so you're saying defensives and banks is what you're looking at, right, in terms of sectors, and anything specific in terms of that? What are you looking at, larger side of the end or the mid-cap side would you look at in these specific sectors?
No, so we are looking in terms of financials, we are looking, of course, at the larger side. We do not like to bet on the smaller banks or the smaller financials when you're getting the bigger ones at a better price and better scope of growth and better earnings visibility. So see what has happened in India, the 1 lakh crore that the government has put in the hands of the consumer. You have to look at that relative change. And because markets, have got very, very, I would say, they limit their scope too much in these days, unlike the other markets that we have seen. Now, you have to spot those relative changes that are happening. For example, as I told you, the tax rebate that has been given, the things that are happening in China with the US Biosecure Act, what is happening in Bangladesh post, the problems in Bangladesh in the textile industry. So all these are giving much bigger advantages to India, and all the leaders in these particular sectors for the next couple of years should do well.
Thank you so much for joining us, giving us a sense of the markets and how do you see markets as well as earnings pan out from here on. Well, moving on, we'll now slip into a short break. But while we slip into the break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Trading Hour. Well, the markets continue to gain with significant gains. The mid-cap, small-cap index both now up over 1.7% each. Well, moving on, Chennai-based Shriram Group and South Africa's Sanlam are planning to invest about 200 crore rupees in their new 50-50 joint venture, Shriram Wealth. They plan to bring wealth management solutions to all Indians with investable surplus. My colleague Yash Jain spoke to Subhashri, MD and CEO of Shriram Capital, and Paul Brendan Henrati, CEO of Sanlam Group, as well as David Marshall, who's the head of Asia region at Sanlam. Let's listen to excerpts from that conversation.
To be clear, we will only ever do anything in India with Shriram as partners because they've been a tremendous partner for us for 20 years and we've got a very high degree of loyalty towards them. We think now that firstly, you've had tremendous growth in the Indian economy for many years. We know that in the not too distant future, this will be the second biggest economy in the world behind the US. And we know that it's a natural phase of evolution for asset management and wealth industry to come in the life cycle. And so for us, it's a natural phase to get into the development with Shriram of asset management and wealth. We see that as a very familiar journey of developing economies. And the discussions are well advanced. Ourselves and Shriram are creating effectively a greenfields operation to begin in the wealth and asset management space in a joint venture situation. And that's really the reason that we're here talking to you today.
How soon can we expect an announcement on this front? B, what could be the shareholding between the two groups on this venture?
Okay, as far as timeline, I think like Paul mentioned, we are well advanced in building the leadership team, the infrastructure to the business, subject to a few regulatory approvals and certain transaction documents. I think we are very close to getting something done maybe the next 3 to 6 months, may not require more, subject to all the approvals. And as far as the partnership, it's going to be a greenfield project. We will like to have, I'm hoping, and Sunlam too, that it be a 50-50 JV. They bring in their expertise of 100 years in this business, and we bring in our domestic local knowledge.
We are at a point where the insurance regulator has also been nudging large companies which have spent reasonable amount of time in the business to go ahead and consider a public listing. Should we assume that this year or at best the next year you would actually start considering the listing of these two insurance entities?
We would like to, at this juncture, I think we would like to avoid putting a timeline to this. I think there can be a better opportunity now ever that we see such phenomenal potential growth opportunity, both in our general insurance business and life insurance business. Both our businesses growing at a rate much higher than the industry, and we see that opportunity continuing for a couple of more years. With a task of that magnitude before us, I would like the teams to stay focused and continue in their growth trajectory. Let the time come and we will take appropriate decisions on the listing process.
So you've not even started putting a thought to it right now, so at least it's some time away. Let's not put a number to that sometime, but it's some time away.
Let's answer, every opportunity, every option will continue to be evaluated.
Okay.
But I think from the business side, the focus is to grab the market right now.
Okay.
Both the businesses are doing so well, I don't think it's the right time to get distracted.
What would come first? You raising your stake in any of the two insurance entities, or a public listing where you pay down your stake?
So to be very clear, Yash, we are long-term investors in India. So in a sense, the listing of the businesses is irrelevant to us. We're here for the long term. We're not trying to unlock value in the short term at all at Sunlam. So, you know, for us, right now, there's no pressing case to be made for listing these businesses. I'm very much in Subhashri's camp. These businesses are growing quickly. We think these businesses can be 10x what they are now.
Okay, David, I mean, if I could just understand more on that stake as well as the investment that would come into the insurance entities after that approval really comes through.
So in terms of the insurance companies, if and when the regulatory approval is received, we will be at just over effective stake of just over 50% in both the insurers. I think it's about 54% in one and 52% in the other. In terms of the investment that we're making now in the greenfields asset management and wealth management, that is around $50 million,
okay.
$50 to $60 million in total. Once that gets regulatory approval, that's the scale of the greenfields investment we'll be making.
Okay, makes sense. Subhashri, one question to you. As far as the concerns around unsecured lending in India, which got elevated in the recent past, are those concerns still remain as strong as they were about 4-6 months ago, or have they come down? Also, what kind of growth do you see on the lending side and the asset reconstruction side? Of course, that was a new business as well. Growth on both these sides.
So on the lending side, I think unsecured loans, I think it is turning the corner. With a little more budget emphasis on consumer spends, I think we are on a much better ground than 4-5 months ago. But for specific to Shriram, I think it's a fact that we are not significantly or very little in the unsecured loan, or very irrelevant percentage. The larger part of our balance sheet is in the commercial vehicle and automobile sector financing. I think there we are in very, very good ground, considering that we are from the largest commercial vehicle to the two-wheeler. We are in the entire spectrum of the industry, and almost all our customers are business end-use customers. It's not so. It's most of the assets are earning for themselves, not just the borrower. The assets themselves
Correct. Provide
the earning. I think we are on a good track, and I think growth potential in that credit business continues to be sound, and very significantly important is size of Shriram and the entities. We are able to get access to funding as well. So it's a two-way. Our liability is equally well strong position to support the asset growth. So that's something we are very happy about.
Okay, an interesting chat over there. But with that, we're absolutely out of time on this edition of Trading Hour on CNBC-TV18, leaving the Nifty at 22,900 levels, and mid-cap, small-cap continue to outperform the benchmark indices. But with that, it's a goodbye from Vivek, myself, as well as the team who put this show together. Don't go anywhere. You have Halftime Report up next.